Hi, this is Louise Hogan from the West Northamptonshire Pension Service. Welcome to video 1 in our new video series, Your Pension Journey. This video will provide an overview of the scheme and some of the actions you need to take when you first join the scheme. If you're in the middle of your career or approaching the end of your career, you'll need to check out videos 2 and 3 of this series. This video is just an overview and won't cover all scenarios. So please make sure you check out our website and the guide to the scheme for more information. Let's start with an overview of the scheme. What is the Local Government Pension Scheme, or LGPS, as it's more often called? For most scheme employers, the LGPS is a contractual scheme, meaning your employer has an obligation to offer its eligible staff access to the scheme from the start of their employment. The LGPS is a defined benefit scheme, meaning the pension paid to you is determined by the rules of the scheme and worked out based on your earnings and membership. It's not affected by the performance of investments, so you don't have to worry about what's happening in the economy. As well as receiving a generous and secure pension, other benefits of being a member of the LGPS include tax relief on the contributions you pay, protections for you and your family if you become too ill to work, are made redundant over the age of 55, or in the worst case scenario, die in service. There's also the option to take some of your pension as a tax-free lump sum, and there are a number of options and flexibilities to help make your pension work for you as you move through your pension journey. You can find out more about those in the next video. Let's look at how your pension builds up. As this video is aimed at those starting their career in local government, I'll focus on the current arrangements, but will quickly touch on some of the earlier arrangements for those that might have been in the scheme before 1st of April 2014. It works like a savings account. Instead of you putting your money into a savings account, 1/49th of your pay is put in your pensions account, and where your savings account is increased by the bank savings rate, your pension account is increased in line with inflation, usually based on the Consumer Price Index. Your pension builds up according to the pensionable pay you earn between 1st of April to the 31st of March each year. This is the scheme year, and it's not the same as the financial year, which is 6th of April to 5th of April each year. For more information about pensionable pay, please check out our website. So let's look at the example provided on this slide. In this example, the employer has told us that the member earned £17,640 in pay over the year. If you divide 17,640 by 49, the build-up rate, you get £360. This means £360 would be the amount of savings added to the member's account for that year. This would then be adjusted in line with the cost of living, usually the Consumer Price Index, at the end of the scheme year. CPI is effectively a measure of inflation that's added to your pension. So that's a very simple look at how your pension builds up over a single year. As you continue on your pension journey, your membership will increase and your pension will build up each year. So as long as you remain an active member in the scheme, your pension will continue to grow. Each piggy bank represents your pension savings for a single year. Each year's savings are added to the balance from the previous years, and that new total balance is then adjusted in line with the cost of living. So for example, if you remain in your job, your pension would steadily increase in line with your pay. So the previous example, in year 1, you built up £360. The following year, your pay increased and you add £400 to your pension account in year 2, and so on. Alternatively, if you reduced your hours or salary, the pot would simply grow more gradually. It's important to note that your pension savings from previous years wouldn't be affected by a reduction in your hours, because the amount you build up annually relates specifically to the year in which it was earned. Currently, the LGPS is a career average scheme, meaning that your benefits are based on the amount of pensionable pay each year. However, this was not always the case, and if you have scheme membership before the 1st of April 2014, then the benefits built up during these periods continue to be calculated using your final pay at the point you leave the scheme. For membership built up before the 1st of April 2008, we divide your final pay by 80 and multiply by your length of membership before 1st of April 2008. In addition to this, the benefits a member receives will also include an automatic tax-free lump sum worth 3 times their pension. For membership built up from the 1st of April 2008 to the 31st of March 2014, we divide your final pay by 60 and multiply by your length of membership built up between 1st of April 2008 to the 31st of March 2014. If you have membership in the local government pension scheme before 1st of April 2014 and join that with your current pension, your total pension will also include some benefits calculated using your final salary. Any pension you built up before the 1st of April 2008, you will get 1/80th of your final pay for each year you were in the scheme before that date, and an automatic lump sum worth 3 times the pension amount for that period. For any pension built up between the 1st of April 2008 and the 31st of March 2014, you will get 1/60th of your final pay and have the option to give up some pension in return for a tax-free lump sum. This means that if you have membership during all 3 of these periods, each period will be worked out using the calculation that applies to that period, and the pension you receive will be on the total of all 3 calculations. It's important to note that even though we calculate all 3 periods differently, they all form part of your total pension, which must be paid at the same time. Each period cannot be paid separately. So that's how your pension builds up. Now let's talk about how much it will cost you. As an example, we've included the current member contribution rate bandings. Your employer will decide on the rate you pay when they enroll you into the scheme. This should be based on your actual pay and any pensionable payments your employer decides to include. They should review your rate each April when the new rates come into effect, and on any material change to your pay, such as promotion. The member contributions don't affect the pension you get at the end. The rates are determined nationally, and if these contributions and the investment returns on them are not enough to cover the growth of your pension, your employer pays the difference. Now we understand more about the scheme itself, here are some of the things that you need to do when you first join. The first thing you should do is sign up for your online pension account. This will allow you to manage your pension throughout your career and is how we will get in touch with you. Any documents you request will be sent to your online pension account. We are digital by default, and if you really cannot access information online, please let us know in writing and tell us how you would like us to contact you. You can complete a membership information form to inform us of your previous public service pensions and previous LGPS membership, which in most cases will automatically be combined. If you are considering transferring across a non-LGPS workplace pension or any private pension benefits, please take a look at our Transfer In pack. After 12 months of joining the scheme, you will require your employer's consent for any transfer to occur, and the policy is usually quite strict unless there is a valid reason why the request has not come earlier. That's the end of the first video in this series. For things you need to think about later in your career, please watch videos 2 and 3. For help activating your online pension account, watch video 4. We hope you enjoy these videos and find them helpful, but please remember that they are only designed to give you a flavour of the things you need to think about and do not cover all situations or provide all the detail you need. If you'd like to know more information about any of the topics covered, or a topic you are interested in is not covered, more information is available on the websites shown on screen.